All right, what is trading going to look like Monday? The market averages had their worst week since going back to October. A lot of this spun by the Gamestop, the whole Robinhood issue, and people countering the short selling going on there. But the concern now with the Dow back under 30,000 is this feeds on itself, that large investment firms that were betting on stocks losing their value have to make up for that and maybe start tapping their winning positions in the market averages in big names like Amazon and Apple and Facebook and a host of others. And that is going to feed on the selling fury here out of fear alone. Is that a legitimate concern? And should we be looking at this way beyond just the direct issues that are in focus right now? Let's go to Rebecca Walser, Walser Wealth Management. We got Dan Geltrude back with us, CPA, market analyst, and our own Charlie Gasparino. So, Charlie, that's the fear that it feeds on itself. I guess you could call it the opposite of irrational exuberance, irrational fear, and that it gets these guys, especially the big hedge funds and short trading firms. Meridian comes to mind, Citra and some of the others, and they're going to have to recoup those losses somehow by digging into maybe some of their more winning investments. Do you think that's a legitimate fear?
I think it's a legitimate fear. I do not think it's going to be a long-term fear. I mean, this is let's just unpack this a little bit. What's going on here is exceptional and a great story and interesting from a market perspective and a market plumbing perspective, structure perspective. But we are talking about 13 stocks, right, that are at issue here. We are talking about a bunch of hedge funds that are short those 13 stocks. Those hedge funds that are short those 13 stocks are obviously going to have to sell out their positions to make up for the losses. It's not this. I don't think it's the systemic risk that we've seen on other sort of market contagions, which comes to mind. Stuff that comes to mind most recently is long-term capital management. Back in the day, the Mexico peso crisis, where there was potential systemic damage across the Wall Street and maybe the banking and the whole financial sector. Obviously, the 2008 financial crisis, which was a liquidity crisis that the government had to bail out the street. I just don't think we're there, Neil. It's just not enough. You would see much more volatility, I think.
Okay, fair enough. You might want to check your mic, Charlie. Something is maybe rubbing against it here. But Rebecca Walser, let me ask you about another concern, that this has created a sort of a new cottage industry in the markets where they look at a lot of stocks that are shorted. The 50 most prominent names, there's even, I understand, an ETF for them where you could trade against that, and that thing is up 33% if you bought that. So I'm wondering whether this could spread beyond that, and whether people are now saying, all right, you look at general market averages and some of the big names that look very pricey, here's an affordable pool of stocks I can dip into. Do you see that happening?
Well, I do think what's happening here, Neil, and not to rehash Charlie and Charles's thing yesterday, but what I do think is happening is people are being awakened to the fact that you have a Robinhood. You always start
something. Gaspo always starts something to finish something.
I don't want to get into different comments on Charlie here, but I will say,
go ahead.
This is awakening people to the fact that, wow, you had a chat room message board that had an impact on the hedge funds. And so that is the little guy. And they're alarmed by the fact that when the little guy, made some money and the big guy's, loss, that trading was shut down. And I know that Charlie has said, well, they didn't have the capital. But as Charles said yesterday, they could have raised it. And then Merrill Lynch also following and saying, well, they might come to us, so let's shut it down. That doesn't bode well for a free market. And people are saying, what's going on here? Something is not right. And I think that is systemic, and that's going to have to be accounted for and answered for. People want to know what happened and why.
It's uniting, Dan Geltrude, Republicans and Democrats that said, all right, we got to look into this. And earlier I spoke to Senator Marshall of Kansas on this, who said, and maybe because AMC is in his state, that it bears watching. This is from Senator Marshall a little while ago.
How many people would watch the Super Bowl if we changed the rules at halftime? And that's what I feel like a lot of investors feel like, that everyone deserves equal opportunity to make money on Wall Street. We we got to be careful here, not overreact. But let's take a dive and see, why did they pull the rug out from under us?
All right, that sounds like the old Ronald Reagan here. I'm from the government. I'm here to help. But what do you make of that?
Well, Neil, I'm not against the government having an investigation into what happened and figuring it all out. But the most important thing here, in my opinion, is that we're maintaining a level playing field. And when things started to shut down, it became an unlevel playing field. Now, there's no reason for the government to believe that they have to start babysitting investors. There's a parallel here to a gambler going into a casino. If that gambler loses their life savings because they got caught up in the emotion of the gambling, that is not something that the government should be stepping into to say, well, wait a minute, we have to look at what's happening, whether the house won too much or the investor lost too much. Ultimately, the market is going to straighten this out over time because people got burned, and hopefully they're going to learn their lesson.
Neil,
you could be right about that, Charlie. The one thing I see when I hear the Rush Limbaughs and all of these others, like them though I do, I mean, come on, this is some sort of a political statement here. You go after one, you don't the others. You're not for the little guy. You're protecting the man or whatever. Loses sight of the fact that I think all of those people on Robinhood and all the others, in the end, they don't want to make a statement. They want to make money. There's nothing wrong with that. But when they flood the system to the degree they do, they want to make money. But what I'm asking you is a fix to control that. Is that a dangerous trend, or is it something that should be watched at? Are they getting more agita from the public than they deserve? In other words, from the regulators, that the short guys don't, because the short guys do get a lot of attention and they do get a lot of scrutiny. So I don't know if there's a double standard there. I know they're both interested in making money. Nothing wrong with that.
Right. And by the way, Robinhood is interested in making money from the little guy. That's why it was created. And it needs the little guy to keep trading through them.
Nothing wrong with that either. Yeah.
There's nothing wrong with that. And that's where the logic of all this class warfare garbage comes. It misses the boat. I mean, it really is stupid. Robinhood had to stop trading, not because it didn't want to. Robinhood makes money when there's trading. It stopped trading because it couldn't handle the volume. It needed more money, more capital to settle the trades. Period. End of discussion.
And it got more money. And by the way, it got more money. Now, all these people who say it's only the big guys who get help, Robinhood got a $1 billion cash infusion. It was able to redo some credit lines to make GameStop trading more available to customers. So if you're against, these lines that are set up to help institutions, well, you better include Robinhood in them.
Right. And Neil, hedge funds that short stock are under investigation all the time. They always go under investigation. They're always under investigation. This is really a stupid meme, that the notion that it's a populist, that they're screwing little guys. They're not. Now, you can make the case, should there be restrictions on how much someone could buy on leverage and margin using the Robinhood account? That's a whole other argument.
All right, Rebecca, let me ask you a little bit of that, because I'm not saying, I always hate when they make these things political when they're not, on the right or the left. Just stop it and look at overwhelmed systems that couldn't handle the volume that they were dealing with. But one thing that has come up, and it's going to keep coming up, is this idea of everyone heading into this. In other words, not among the original GameStop and AMC investors, but others looking around and say, hey, I want in too, feeling they might have missed out on a Tesla or an Amazon, but this is their chance to also get some rocket money. And then there is a fear that that crowd gets left out and that crowd gets screwed. And that is a legitimate fear. But again, should the government try to correct that? Or is that, look, buyer, seller, beware?